Okay, we are live. Ladies and gentlemen, we are live for Bootleg Weekly. I ran because I was having post-work drinks with some work friends, thinking I was going to be the one who was late. But as you can see, there's only one of us here. And it turns out that Mr. Roy is late. Did I get the time wrong? No, it is 6:30, which is what we agreed upon. Well, welcome to those of you who are here on time, like myself, and for those of you who are watching on Roy's channel, your guy isn't here. He's not here. He is, in fact, pulling a Tanner. He is late. Can you guys hear me? Okay, I'm not sure. So we're gonna start this show. And we're going to talk about a whole bunch of topics as people start rolling in here. And hopefully Roy is one of those people that start rolling in here soon, because I am not great on live streams alone, as I tend to ramble. But it seems a whole bunch of you degens are here. Starship launch in 56 minutes. Maybe we'll watch that on stream. Maybe if the stream is good, we'll watch that on stream. Elijah's here. Pizza last time and drinks tonight. Amazing. Love that. I am still recovering from my pizza that I had over the weekend because that was a massive mistake. I had way too much. Travis is solo today. Yes, Ron is not here. If Roy, I'm public ultimatum right now. If Roy does not show up within the next 5 minutes, I am going to leak his cowboy photo that he shared with us on DMs, and y'all are going to see Cowboy Ron make an appearance. So 5 minutes, timer starting now. What positions are you opening? So I actually wrote the most degen nebulous puts, and I rolled out my Duolingo puts. Let's move this. I rolled out my Duolingo puts, and they were puts for 335 at Duolingo that were expiring this week on Friday, and I rolled them out to September 12th, and I rolled them down to 330, and I got a net credit for doing that. I closed my nebulous $65 puts that I had expiring this Friday because those were 80% in the profit, and I wrote, I don't know if I should tell you guys, but I wrote nebulous $75 puts for end of September. So we'll see where Nebulous closes. I collected $9 of premium on those for $75. So what does that come out to? Like $64 for the cost basis on Nebulous for end of September. I might end up doing very well on those because Nebulous might, shoot past 75, in which case I'll probably just close them at 50 or 60% profit if that happens relatively soon. If the market goes down, then am I sad about holding Nebulous at $75? Not really, because I already collected $9 worth of premium. So very aggressive. Covered calls in the money, or sorry, cash secured puts, even worse, in the money at $75 for Nebulous. That was my most recent trade that I did today. And then what else did I do today? I bought a whole ton of SoFi. I bought like over 1,000 shares of SoFi this week at like $26 because, quite frankly, I think they're very well set up for the future. And I realized that out of all the companies right now, which one do I feel most confident was going to execute consistently? It's probably going to be SoFi. So I bought more of those. But I already have a pretty established position in SoFi. And so actually, funny that you mentioned this, Jared. I was thinking about writing $30 puts for SoFi for December, either $30 or $32 for December, because if SoFi does continue the rally and we have the index inclusion, I'm actually going to probably just make a video about this, that I think we can see the rally continuing into the new year because we might have the more inclusions, we might have institutions accumulating, and also management has their tranches that they have to earn out. And I think they're going to be doing their utmost with regards to the product, reintroductions, and the roadmap that they're publishing to make sure that they can, push up or increase that anticipation. So that might be something. I didn't write those. However, I'm thinking about it. That's probably not the worst play in the world to write. But again, I'm like, if I get, and I was having this conversation with a friend, earlier today, he was saying, why would you write so aggressively? And I was saying, well, if I get called and I own more SoFi shares, well, like 25% of my portfolio is already in SoFi. Like I'm incredibly bullish on the company, and I wouldn't mind owning the shares. So, yeah, that's sort of where I was coming from with those. Roy is still not here, guys. I am running out of things to say to you guys, and the fact that it's 6:38, so the man is 9 minutes late, almost. And our channels are split. I think I might have to post this picture. Yes, Tom Jerry, you're right. I think I might have to post Cowboy Ron. I don't want to do it. I don't want to do it. He's forcing my hand. I made an ultimatum. Now I have to back it up because he's still late. He's still late. Yeah, he's forgot. Everybody message Ron on Twitter and let him know that he's late and he's supposed to be here. He has obligations to his fans, to the 60 people who are watching on Ron's chat. This is unacceptable. This is unacceptable, and we're going to get Cowboy Ron. I just have to scroll now and find the picture. But let me see if I can find it, actually. It's in our private chat here. Here we go. I found it. Are you guys ready for this? Should we do this? I don't know if I should do this to my guy, but he's late, so he did this himself. Do you guys agree? Do you guys want to see Cowboy Ron? Let's see here. George says, I sold SoFi $30 strike for January 16th, 2026, $7.69 a contract. That is crazy. I love that. Yeah. First, the MIT abandons us. Now, Roy. You know who will never abandon you? B. Martin is Tevis, the guy whose channel you're not watching this on right now. Because I can see here on StreamYard who's watching from whose channel. So sorry to call you out like that, but I know actually he's watching on Roy's channel. Thoughts on Webull? Actually, I'm going to bookmark that and I'm going to cover that towards the end. I want to see if giving Roy one last chance here, and he's not here. All right, I'll do a quick peek for Cowboy Ron. Here you go. You ready? Boom! Look at that guy, handsome as ever. I'm going to put this on a thumbnail one of these days, and this is the Travis and Ron show. And I'm going to do a little sombrero for myself that I did when we were in Mexico. And then I'm going to put this cowboy hat on Ron. And yeah, Travis and Ron show, baby. Cowboy Ron. Okay. Well, I mean, look, guys, it seems like we're doing this solo. So it might be, oh, maybe not solo. He saw Cowboy Ron and he decided to show up, everybody. The public humiliation worked. Ladies and gentlemen, Ron.
Sorry, guys. Sorry, Tevis. Man,
I was running out of things to say, man. Holy.
Yeah, totally my fault. I guess I'm becoming Tanner now, developing a bout of Tanneritis. I had so we had our normal time, but we moved it around a bit. And what I did is I set the alarm, but I forgot to adjust it to the new time, and which we're going to shift around a little bit again because travels. Both Tevis and I are working guys. We got to shift our schedule to whatever actually works for us too. So, but this was 100% my fault. So Tevis is the man. My apologies to everybody, especially Tevis.
I freaking love all 150 plus of you that are just here, just watching me stumble and mumble my way through, being socially awkward. Even though I've been doing content creation for like 5 years now, I still am super awkward when it comes to doing a stream alone. I showed them your cowboy photo, so that's what you get. That's their punishment.
Yeah. I'm in Texas now, so we got to do as the locals do when in Rome, right?
Yeah.
All
Ron,
right.
how's it
Where do
going?
we want to start? Oh, by the way, as we go, guys, we are going to move some things as far as schedule. So you're going to see different times of Bootleg Weekly. I will set the alarm for the appropriate time, so this hopefully won't happen anytime soon again. Yeah, just be patient with us over the next month or so. We got a lot of stuff to talk about. I know Tevis has already started. I'm not sure what else he's talked about too. At the end, if you guys are new with us, be sure to put your questions in the comments. If it's not related to what we're covering, we'll hit those at the end.
Thank you, Roy. I really like that, man. Love you too, Roy. Not you, him. All right.
Oh man.
Look, I just shared a little bit about what my DGen trades were, so they got a sneak peek into that, and maybe we can do the housekeeping note. So I will be traveling over the next month, and I'll be in a different time zone, and 6 p.m. is going to be midnight in my time zone. So we can still keep 6 p.m. My preference is just to do something a little bit earlier. So that's the only change that's going to be happening over the next month. We definitely won't have later shows. So if Elijah is still in the chat, watching, and we want to do a hymns episode, we probably can't do that at 8 because I'm not going to wake up. Like, I love you guys, but I'm not going to wake up at 2 a.m. To do a show with you guys. So probably 5 or 6. Maybe actually I can do a little bit more collabs or with Manuel because he's going to be in my time zone. But yeah, TBD. That's why we have to move things around. So we haven't talked about any of the topics. Maybe I can throw up the tweet and we can see what people are commenting about.
Yeah, there's a bunch of good stuff. A bunch. Yeah, as you're pulling that up, like a quick one, which is Crbl. I think that that's something that's gotten a lot of attention recently. You probably don't know this, Tevis, but did you know I actually worked at Crbl for like 6 months?
No.
Yeah, literally.
You would have been fired if you worked there today, my friend.
I wouldn't have made it. Yeah, I would have been out there protesting. Like, people protest for the dumbest stuff. Protest this, the removal of rocking chairs, and honestly, like, so if you guys you've been in the Crbl, right?
I have, yeah.
Okay, yeah. Like, it's not Crbl if you aren't having your breakfast or your lunch underneath an antique bull castrator. It's not going to be the same. I don't know. Honestly, like, there's been a lot of refreshes and rebrands. I've seen some people, some friends and people I know push back on this and like, oh, it's no big deal that people rebrand all the time. That's true. We've seen that with McDonald's. We've seen that with Taco Bell. We've seen that done successfully. Cracker Barrel, like, their whole thing is like, if you've been in, breakfast food is good, but like everything else is just, it's okay. Like, they got the toy store, the retail stuff. That's actually where I worked for like 6 months when I was getting my master's degree, looking for something better. And cheers, by the way, buddy.
Hey, there you go. Yeah, there you go. Nothing like some morning eggs with a side of casual racism at Cracker Barrel.
Yeah, well, it definitely wasn't like that. But I mean, like, so I'm here in Texas. We lived, previously in the South too. Actually, 2 different places in the South. So for some Southerners, like, this is like nostalgia. It's a taste of home. And when they're already changing the menu, which I think they probably needed to, because the food other than breakfast was just not very good at all. And there's some things that you need to change. But when you completely pivot away from what made you an institution to the point where, like, some people, so I've got a friend, like, real quick other story. I've got a friend, a coworker, whose mother-in-law actually lives internationally, and she flies up and visits like every year or two. The number one place that she wants to go to, Cracker Barrel.
Hell yeah.
I'm not kidding. So yeah, basically it alienates their base. Now the question is, can they actually successfully pivot with like some really good, updos? Like, it looks nice to me. I like that. I'd actually probably go more because I don't really like Cracker Barrel, but there's a lot of people, like, their core audience, I think they're going to lose. So I think that for some companies this is good, but like for Cracker Barrel, this is a mistake. And we see that really with the way that the stock has been priced recently. It's been getting sold off.
Yes, very true. I'll throw up your screen in just a second, but let me first share with you all the stock price of Cracker Barrel in real time. And I don't have many tweets around this rebrand, but I'll show you the stock and you tell me how the rebrand went. CBRL, yeah. So here, here we go. Cracker Barrel. It saw a little bit of a bounce back, 6% up. It's up in after hours, so something must have changed. Maybe it's the president's tweet, which I'm going to throw up in just a second.
Yeah, the president might have tweeted about this.
Yeah, exactly. The president of the United States might have tweeted about Cracker Barrel's rebranding. $63 around that range, 62 all the way down to $50 per share. Quickly rebounded. They do pay a dividend. Cracker Barrel does. I looked at their financials, and then with this bounced up today. And here's the reason why it bounced up. Roy?
This is Donald Trump tweet if you guys are listening, or not tweet, but Truth Social. Cracker Barrel should go back to the old logo, admit a mistake based on customer response, the ultimate poll, and manage the company better than ever before. They got $1 billion worth of free publicity if they play their cards right. Very tricky to do, but a great opportunity. Have a major news conference today. Make Cracker Barrel a winner again. Remember, in just a short period of time, I made the United States of America the hottest country anywhere in the world. Guess global warming is a real thing. 1 year ago, it was dead. Good luck. I mean, he's actually right here. There's a lot of times when I disagree with him, but this is one where I think it was a mistake. The one thing I do disagree with is I don't think it would be really that tricky at this point. You basically just to say, hey, we have overwhelmingly heard from you guys. We hear you loud and clear. There are other aspects in our business that we're looking to improve. But you're right. Our image does evoke nostalgia. We have a loyal customer base. So, yeah, we're going to maintain what we have there, but bring it to you even better. And so, or even go like further, like instead of just normal Southern charm, like go to the extreme end, you know, maybe not.
So, Roy, let me ask you this. What is the over under that you would put on the United States government taking a 10% stake in Cracker Barrel?
Oh, my goodness. If that happens, bro, it's over. It's over for Chapel. Like it's done. We'll talk about Intel maybe here next. And we need to. And you have some, like you said, something brilliant the other day on it. So, I mean, stroke of genius. Honestly, I haven't done it yet, but yeah, if we start seeing that be commonplace, like I don't know, like. What am I going to invest in? I guess meme coins. We got meme coins. We got the prediction markets. There we go.
Oh boy, do I want to talk about the prediction markets? Congrats to Taylor Swift, but holy moly!
Okay. Do prediction markets first, and then we're going to hop back to Intel and this government stake stuff.
Segig says, actually, I'm not going to throw that up because I just read it. Segig says, is Trump going to sell Intel for Cracker Barrel?
Oh, goodness.
Oh, boy. Yeah. So I think like American Eagle initially pumped hard because Trump tweeted about it. And Trump has been tweeting about several different names. Intel was one of those names. He initially came out and critiqued the CEO. And then, actually, I think I shared this with you. And then he came out shortly after and said the CEO, great person. And the U.S. took a 10% stake in Intel. So let me see. Yeah, here we go. So this is the series of events. This is how the week has been going so far. August 7th, the CEO of Intel is highly conflicted and must resign immediately. There is no other solution to this problem. Thank you for your attention to this matter. He didn't say this on Cracker Barrel, so maybe that's a sign.
They have hope.
August 22nd, it is my great honor, in caps, to report that the United States of America now fully owns and controls 10% of Intel, a great American company that has an even more incredible future. I negotiated this deal, capitalized for some reason, with Lip-Bu Tan. I hope I pronounced that right. The highly respected chief executive officer of the company. The United States paid nothing for these shares, which we can talk about. And the shares are now valued at approximately $11 billion. This is a great deal. Again, I don't understand why he capitalized this deal for America, and also a great deal for Intel. Building leading-edge semiconductors and chips, capitalized, which is what Intel does, is fundamental to the future of our nation. Make America great again. Thank you for your attention on this matter. Yeah. Art of the deal, Roy, what do you think?
So I'm any other company, I would be completely 100% opposed to this and think it's reprehensible and wrong. Almost any other company. There's maybe like a couple other rare exceptions. There's a great article I posted it on X by Stratechery that kind of broke down like that this is a terrible deal, but or a terrible thing, but probably also the best thing possible. Intel is a freaking mess as a company. This doesn't really change that at all. It may change the trajectory of the stock. Ultimately, like the reason why there's two reasons why I'm not like completely opposed to it, and then I'll talk about why in general I hope this does not happen at all. One is the United States government has given billions and billions and billions of dollars to Intel, basically to help them build their foundries here as a means of national security. And so the United States government giving the free money and then getting a stake in the company, it's not the worst thing. It's not great. I don't love it, but it kind of makes sense if you squint hard enough. Now, the other thing that I don't mind as much is I do think the United States needs to have and has a strategic interest in having foundry capabilities here in the United States. Now, this helps with that to a certain extent because Intel has that, but they're the worst foundry. They've been so terribly mismanaged. Their customers hate them. They're just kind of a train wreck as a company and as a business. They had opportunity after opportunity to pivot. They're trading at the same level as they were back in 1997, I believe. So that's a little bit of an opportunity cost. And the thing is, though, unlike a lot of businesses, Intel, like in developing chipsets and then actually doing foundry manufacturing, that's not something that you can just turn on a switch and it's ready to go overnight. Like even in the most dire of dire circumstances, let's say China did invade Taiwan and at the same time bombed the Samsung foundries, both which are within reach of mainland China. I don't think that's going to happen, but let's just say, and the United States did not have foundry capabilities. There are a few smaller ones, but by and large, that cripples the United States economy. That cripples military. It's a dangerous thing. So having that capability is probably very important for national security, especially when your major rival in the world. Hopefully, it never comes to actually a war of any kind, whether that proxy war or real. But when a strategic asset like that is within striking distance, so Stratechery made that point. I wasn't thinking in that way. Now, the reason why I really don't like this at all. I'm like okay-ish with it. It's not great, is because I'm afraid that it might set precedent. And Howard Lutnick basically confirmed, yeah, it sets precedent here. So once you do it once, it's a whole lot easier to do it multiple times. It's kind of like if Tevis and I are eating lunch and I steal his lunch one day, well, and he's okay with that, well, that sets precedent. I'll just keep stealing his lunch until he beats me up because he's bigger and stronger than me. But yeah,
what a wild example. Yeah, look, I agree. It is something that does set precedent. I don't understand why they would do it with Intel. Like, just do it with Nvidia. Like, that's also a U.S. company. Like, just, what I'm saying? Like, just do it with actual companies that have an upward, trajectory as opposed to companies that are not as leading edge as their competitors. Because Intel, in my opinion, and you can, we can debate this if you think I'm wrong, but Intel has been on a downfall technologically speaking. I would pinpoint ever since Apple dropped them, from the processing the 8-nanometer chips and so on. But you could argue even before that. And so I'm like, why would we provide, almost like a bailout to a company like Intel, where if you really want to encourage American companies to succeed, then do it with companies that are already executing internally, as opposed to companies that might not be as competitive internally, but you're just propping them up artificially. That's what Canada does, i.e. look at all our airlines and telcos.
Yeah, the United States has encouraged / threatened TSM and Samsung as well to build foundries here in the United States. Part of that through the tariff pressure as well. And honestly, that's one means where largely it's always nuanced. Like I'm never rarely with policy like this is 100% amazing and awesome. There are some things, but The tariff stuff, like one good thing that actually came out of it is nearshoring some manufacturing from, especially with foundries. But I honestly think that should have just been the approach that they stuck with, to just say, okay, you know what? Intel is just messed up as a business, and we've given them a ton of money. Let's not take a stake. We've encouraged TSM. We've encouraged Samsung as well to build foundries here too. So good. This is heading in the right direction. Leave it at that. Now we're looking at Lockheed Martin taking a stake, maybe Raytheon. Yep. I mean, like, is it crazy to think if they do that, then the next one is Palantir? I don't love that. I don't love that at all. It does. Now, my question is too, how did this get decided? Because I don't have details on that. Maybe you've seen something, but it's been really sparse. Like, was this the United States government basically just saying, give us 10% of shares or else? And the board of directors got together and did it without shareholder approval? Did they issue more shares and do it that way? And then what would that look like? Can private companies, they should be able to, or public companies rather, can they, like Raytheon, say, you know what? Thanks, but no thanks, U.S. government. We don't want to give up 10% of our stake.
Yeah, okay, there's a couple of different streams which we're going to go down ethically, morally, strategically. But first of all, let me pull up the press release from Intel, and we can read a little bit of it around how this happened. So here I have the press release. This is Intel's IR page. It says here on August 22nd, just a few days ago, that Intel Corp today announced an agreement with the Trump administration to support the continuing expansion of American technology and manufacturing leadership. The U.S. government will make an $8.9 billion investment in Intel common stock, so definitely not free, reflecting the confidence that the administration has in Intel to advance key national priorities and the critically important role the company plays in expanding the domestic semiconductor industry. The government's equity stake will be funded by the remaining $5.7 billion in grants previously awarded but not yet paid to Intel under the U.S. CHIPS and Science Act, and $3.2 billion awarded to the company as part of the Secure Enclave program. So this is probably what he means by free. Maybe I'm wrong on this, Roy, but what I understood here is that Intel essentially had a bill to pay, and they said, hey, you can pay us in stock instead of cash. Is that fundamentally what happened here with regards to the grants?
So, yeah, I've not read this, but it sounds like that. Essentially, they're like, hey, we've already given you this money. We're going to give you this additional grant. You give a stake that's worth, roughly the same. So, again, it's not something like I can purely, completely hate, but I don't love it. Not at all.
The article continues here saying the $8.9 billion investment is in addition to the $2.2 billion in CHIPS grants Intel has received to date, making for a total of $11.1 billion. And let's see if there's some other numbers here. Yeah, here we go. Under the terms of today's agreement, the government agrees to purchase 433.3 million primary shares of Intel's common stock at a price of $20.47 per share, equivalent to a 9.9% stake in the company. The investment provides American taxpayers with a discount to the current market price, and Intel, just for reference, everybody, is $24.35 as of close. So you get, I don't know, what is that, 20% discount?
Yeah.
Passive ownership with no board representation or other governance or information rights. The government also agrees to vote with the company's board of directors on matters requiring shareholder approval, with limited exceptions. That's also really interesting. The government will receive a 5-year warrant at $20 per share for an additional 5% of Intel common shares, exercisable only if Intel ceases to own at least 51% of the foundry business. So basically, they have an option here where they can have more of the company. The existing clawback and profit share provisions associated with the government's previously dispersed $2.2 billion grant, so the $2.2 billion under the CHIPS Act, to Intel under the CHIPS Act, will be eliminated to create permanency of capital as the company advances its U.S. investment plans. Wow. Really interesting.
Yeah. So, like, the other thing, too, with Intel is at least them running a foundry currently. I think this may change with robotics as that becomes very real. Maybe with AI, like on the design side, I'm not sure. That perhaps it will make economic sense to run a foundry here in the United States. It doesn't. Like most of their competition does well just because they're able to offshore that, be capital light, be in the design business, and that's about it. So, but it's just crony capitalism. Yeah, it's uneasy. I'm seeing a lot of comments like that. I'm glad I'm not the only one that feels that way. Like that's a tough thing is when everybody's like, yeah, this is amazing. And I mean, I'm even seeing Intel investors that are like, dude, like, thanks for the pump, but like, what are we doing here? So, by the way, breaking news. Somebody had posted this in the comments and I looked it up and confirmed. Crbl reportedly has caved and will store its original logo after backlash from the public and President Trump. And so let's check on that stock.
Wow.
It's up quite a bit after hours. Yeah, it's up 14% on the day now. So congratulations, Crbl shareholders, if there are any.
Is this like cancel culture in reverse? Is this like bullying actually working in real time? Because yeah, I guess the only way I've seen it work is in the opposite direction, where you get a lot of backlash and then a brand walks back something. I guess it's the same thing, really.
Yeah, Trump has likened himself to Teddy Roosevelt a number of times, who is famous for saying, talk softly and carry a big stick. Donald Trump talks loudly and carries a big stick. So ultimately, like, things like this happen. I don't know, man. Like, I don't mind this so much. Like, I think Crbl is making a mistake. Him doing something where he just makes a suggestion, that's fine. Versus the Intel stuff / all the defense companies. Like, where does that end? Does it, if it ends with a 10% stake in Crbl for the U.S. government? By the way, if he really wanted to troll people, because he does love to do that, and I kind of like that side of Donald Trump, he should say, well, maybe we should get an equity stake in Crbl because of this.
Dude, honestly, say what you will about, yeah, exactly. Say what you will about Uncle DJ, but he is hilarious. And just some of the stuff he says is so outlandish and so like far-fetched that it's always entertaining. And as a content creator, I kind of respect it because he's like the first content creator president out there. Like he will just go on Truth Social and he'll be like talking shit about a random brand and he'll move markets. It's like what we do basically.
Okay, so real quick before we go on to the next topic, the predictions market. Meet Kevin actually ran as a political figure for governor of California. Didn't win, but let's say hypothetically, like there was a time when movies and the movie industry was very new, and nobody in their right mind would ever think that a movie star would ever become president. Yet that happened with Ronald Reagan, and he was fantastic.
Yeah, so Arnold and what was it? The governorship.
Oh yeah, like it happens more on a local level. Like even Jesse Ventura, was a governor, but like at the presidential level, like Ronald Reagan, that was a shock to a lot of people. Okay, so which content creator, and you guys put it in the comments too, becomes the first president of the United States as a content creator? Out like modern day content, not TV, but internet, YouTube content creator.
Of anyone, or of just like us as a group?
No, out of anyone. So TikTok, YouTube, Twitch.
I got my answer right now. Yeah, it's absolutely 1000% Mr. Beast.
Yeah, I was thinking the same thing.
1000%.
Yeah. I mean, he's so popular, but yeah, out of all of us, like the content creators that I know, clearly Matt Money. He looks presidential. He sounds presidential.
Matt Money would actually be like an astute choice. Like he would actually send this in the right direction. Yeah. Fiscally conservative, very prudent kind of guy. He's great. I mean, he's investing in the future. Amit would be entertaining as hell.
He would be great.
I don't know. I don't know what the direction we would go in as a country. I think Mr. Beast. There was this time, when was it, when Dwayne The Rock Johnson and Justin Timberlake were like, rumored for president. Like it is a popularity contest at the end of the day.
Yeah. Chris Btlg would do really well too as a kind of a centrist option. And he's brilliant. You would be, you're not, you can't legally do it. You'd be very good. Tanner would actually be sneakily good, just because he's always late. And then the opposing dignitaries, like if he needs to beat somebody for something serious, they'd just be thinking, oh man, he's, they'd be start sweating and getting nervous and like, man, is he gonna stand us up? And this is still not gonna happen. And then they'll just make deal after deal after deal. I mean,
dude, let me tell you, and this is I hope my boss is not listening to this. I hope he doesn't listen to this. I would have been fired long ago, honestly. But like, having been for a good chunk of my career in leadership positions at these companies, it is so wild, the conversations that go on around that table with regards to some of the ruthless, like absolutely ruthless decisions that are made that focus entirely on the bottom line and P&L and just completely eliminate that human element of just focusing on the capitalistic aspect of making money and removing all emotions. And it's just quite crazy that like this channel is for me to just blow off steam and just have fun and shoot the shit and just talk about whatever I want to talk about unfiltered. But in an actual high pressure decision making scenario, I think that is a very much practiced and acquired skill set through many repetitions. And I don't know, it would be really interesting to see how different people would deal with that if they haven't had that historically,
For sure. Yeah, that makes sense. Yeah, somebody said, do you know who Ross Perot is? Brock Capital said Tanner is Ross Perot.
Yeah, he was like the third candidate or whatnot. You've talked about him quite a bit.
Yeah, he was when Clinton was running and George H.W. Bush. So Texas businessman, I believe billionaire. Love the way he talked too. It's fun. He actually, I like his politics too. But yeah, he's got the glasses. So I think maybe that's the comp. Plus he was smart and rich. So all right, prediction market.
Yeah. Okay. So let me pull this up because I posted about this and this was quite interesting. Let me give you guys the full story. So as many of you dweebs may not know, that Taylor Swift got engaged today. And here's one interesting thing about this. So Polymarket, of course, as you know, is a betting site. And here was the chances of Taylor Swift and Travis Kelce getting engaged in 2025. As you can see, this was hovering around 25%, and then it jumped up to 45%. This is all, by the way, in the last 24 hours or so. And all of a sudden, when the news came out, it went up to 50 or to 95% because, I mean, there's 5% just people doing the contrarian thing just in case it falls through and they just make a huge payout, right? If it doesn't happen. Now, let me read the post because me talking about Taylor Swift was not on your bingo card for tonight, I guarantee you. So this individual said, not a very consequential thing, but kind of funny. A Polymarket user named Romantic Paul started aggressively buying Taylor Swift to be engaged starting yesterday afternoon around 3 p.m. So right around here where my mouse is, this individual started buying the call options essentially for this to happen. Nearly doubled the price from 25% chance to nearly 45% chance. So just this one individual just massively blew up the market, like started moving the market. As you can see, the volume is quite thin here, only $43,000 is this entire market. This individual says, I had a bunch of yeses that I bought in the 20s just days earlier and sold it to him in the 40s. So this individual doubled their money. I thought to myself, huge price change is kind of weird. Am I selling to somebody who knows the answer already? Who knows? Maybe Paul is just super bullish on romance in general. And then, so I retweeted this because somebody asked Grok or ChatGPT, basically, is there anyone in Taylor Swift's entourage whose first name is Paul? Kind of stupid for them to use their first name, but whatever, not the point. And who could have known in advance that she was getting engaged? Just reply yes, no with a name. Yes, this individual named Paul. Taylor Swift's longtime guitarist, Paul, has been a member of her entourage and could potentially have known about her engagement in advance. So I said, someone in Taylor Swift's inner circle made a ton of money buying up huge calls that she would get engaged literally hours before the news came out. Soon thereafter, news breaks that she's engaged. Great timing, nothing to see here. Congrats on your gains, Paul. Totally legal and upstanding citizen type shit.
Well, okay. Is it illegal? Like, I don't think we know. Do we?
Okay, well, how about this? How about you buy a whole bunch of... So you have Alex Chris on your podcast, and then you buy your entire portfolio. You sell everything and you buy PayPal call options expiring this Friday. And then PayPal releases the most amazing news ever, and you 10x your money overnight.
Insider trading.
Is that illegal? I mean, I can't say what Alex Chris may or may not have said to you. He's the CEO of PayPal, by the way, for those who don't know.
It would maybe be hard to prove, although, I mean, like looking at something that maybe not. Like it's always like I was just lucky that I had all these like calls that were way out of the money that were expiring soon. So with equities, if you do this, you get in big trouble. You go to jail. You do not pass go. You do not collect $200. But ultimately, with prediction markets, like I don't know, like how is it handled with sports betting if you can't throw a game? Like we've already had the Chicago Black Sox thing, it's like 100-year precedent, but
you also get in trouble if you're a player or a coach who is also betting on the game.
But your relatives can, right?
I don't know, man, because like, okay, let's say I'm in the NFL, let's just say, and I tell my mom, hey, you should bet because I'm going to fumble the ball, and then I fumble the ball. Like the odds would be insane. I mean, probably not insane given it's me in the NFL. Like the fumble is pretty much baked in. But just go with me on the analogy.
I mean, that'll get you kicked out of the sport. Like Chicago Black Sox basically proved that. I think even today, Pete Rose as well. He's not in the Hall of Fame, not because he wasn't a talent, but because he did exactly that. Like this, I don't know. It's one of those areas where I don't think that there's firm enough legal precedent to know even if it's illegal. Now, is it moral? Probably not. No. You know exactly what's happening and everything. The funny thing is, Tevis, like this is the first time I've seen like this seems highly suspicious, but I've seen other people and other things. Like there's so many prediction markets for all sorts of different things, including probably companies that you guys work for. You may know and be privy to something that others are not. So for case in point, I know a number of Palantir employees. New York Times, there was a prediction market thing on there. Like, is the New York Times going to visit the Palantir office by whatever date?
Sure.
Some of those people probably knew that answer. And I don't think they did this because, I mean, they got plenty of money from Palantir and the stock gains. But, I mean, they for sure could have taken advantage of this. And there's so many things like that, too. But what makes this really interesting, oh, man. See, that's the thing is, if there's a heavy weighted bet, what that does is actually skews the results to be more in line with what actually is going to come. That makes this very interesting.
Did you see this photo that was circulating with Powell? And it was kind of sad, actually. It was just a photo of him at the bar, just having a drink by himself after Jackson Hole. Like, what if you're that person who just casually stumbles upon Powell after he's had a few, and you talk about rates for whatever reason? Like, you see where this falls apart. Like, it opens a door for some type of malpractice here. And I want to bring up a comment, but I want to let you throw up your screen first.
All right. So this is a post that somebody noticed, a user named Camilo. Prediction markets are still front running Wall Street. Calsh remains a leading indicator for Tesla delivery numbers, outperforming Troy Tesla, who, I mean, he's been killing it as far as deliveries. And so you can see a breakdown. There are some numbers that were updated here by Troy, but like overall, this isn't just a Tesla deliveries thing. This is like predictions markets oftentimes are far more accurate than any other analyst, any other expectation, like rate cuts, everything, you name it. Like it just job numbers.
Yep.
So part of it is like the wisdom of the crowd.
political elections literally going against every correspondent out there who is, predicting the election around the world. Prediction markets get it first.
Yeah. Well, and so like it's really interesting times that we're in, because this is one of the points that I remember Vlad made, and I know that Tariq Mansour, the CEO of Kalshi, has also made this point as well. They're partnered. Is that predictions markets are also very useful because they help to show reality a lot better. Part of the phenomenon, I think, is what's called the wisdom of the crowd. So it's this idea of basically you have this giant jar of jelly beans, and you have one person guess, they're probably going to be wildly wrong. But if you have everybody guess, not share their answer with each other, the aggregate number is going to be weirdly and almost spookily accurate. Now, the what makes this a little bit different is somebody always knows, and so that can skew things more towards where it should actually be. The other factor that is that people can actually see what other people are predicting, what volumes are predicting as well. So that kind of defeats the traditional wisdom of the crowd. But I don't know. Like this is probably not the end of the weirdness of prediction markets, which are probably here to stay. It's weird times.
Well, so I wanted to bring up this comment because I remember this story. There was a guy who bet that there was going to be a streaker at the Super Bowl, and he put a bunch of money on it. And then he himself was the streaker at the Super Bowl. And so even though he got arrested and in a bunch of trouble, he also made bank on that. And then the second example is what we're seeing with the WNBA right now, where players are throwing all kinds of objects onto the court, and then they're betting on the color of said objects. The objects in question are dildos.
You were trying so hard not to say it, brother.
And then they're betting on the color, and I'm like, dude, it's a $6,000 payout if this thing is blue versus green. That people in the comments are like, hey, I'm just gonna buy a ticket for $30 because it's the WNBA, and I'm gonna be the one that so it's so always bet neon green.
It's just weird times. I don't know. The world has gotten more degenerate over the last year for sure. All right.
I think the wider point there, Roy, is that it's going to be incredibly difficult to police these kind of secondary or tertiary markets that open up, because you and I can create a market amongst ourselves. We can go onto Polymarket and we can say, hey, does the bootleg Wkly team break up over the next year or not? And our viewers can then buy yes options or no options accordingly. And then me and you can say, hey, cool, let's go take a heavy position and then let's make that happen.
Yeah.
How is the entire prediction market space, I think, is something that's ripe for some regulation, along with crypto and meme coins and all this. And we can talk about the Kanye thing as well. But it's just the space itself. Because in any regulated market, that would be insider trading, like in its purest form. And it would be very strictly handled. Whereas in predictions market, because it's so new, they don't have those lines of regulations yet.
I think that we'll see more of that as well. Let's hold off on crypto for just a second. I did want to talk Nvidia, and I don't want to forget to do that. I'd like to sneak in some Aehr test systems as well. They'll be talking a lot more of that over the next 2 weeks. Nvidia earnings are tomorrow. Tevis, remind me, do you own some Nvidia, or?
I do not. I do not.
Yeah. Just 100% SoFi, so nothing wrong with that these days, especially. Nvidia is something, of course, I got in during that big pull down in April. They're reporting after hours tomorrow on Wednesday. They're one of those. I mean, there's always stocks that report after them, but it's the last big earnings that's looked at. Now, with Nvidia, we kind of have a very good idea of where they're going, partly because of what comments that Jensen Huang has been saying. We've seen some easing as far as the ability for Nvidia to be able to sell not maybe just H10s, but also other CPUs into China, which, by the way, strategically is really important for the United States. You want to make China dependent on those foundries in Taiwan and also South Korea, not isolate them so they don't have that, because that's when problems. You basically incentivize them to not take action against those things. Anyway, Nvidia is going to see some more international sales, even with the 15% revenue hit. So we've seen capex after capex announcement from all the big traditional hyperscalers. They're increasing, not decreasing size and scale as well. Now, there was also a great little video. I don't think I'll play it this time. I played it last night on the Tech Bros Weekly. I also have it on my X feed from Monday, but it's a Rihard Jark that works for AdSense. But basically, in a nutshell, it's a former NVIDIA employee that talked about the demand, and basically that the next generation of each chip that's used for the data centers is so much more efficient that if you want to be competitive, you have to continue to do the upgrade cycle. This is kind of like when smartphones were brand new, and that upgrade cycle was very fierce. And the differentiation between the first generation iPhone and the second and the third was immense. That if you were 2 years behind, you were like, wow, like it feels like I'm using like a Stone Age device compared to what everything else is able to do. Versus now, the differentiation is slow. Now, some of that is Wright's law, some of that is Moore's law, but basically, bears have been saying for a long time, NVIDIA is cyclical, and this AI demand will slow down at some point. AI is very real. It's accelerating. I think we're more at the beginning than at the end of this wave. I wouldn't call it a bubble, but a wave. And third, the immeasurable improvements that are happening in the chipsets and the data centers as well are immense and compelling and continuing to compel massive capex expenditure. So I think that Jensen Huang will probably capitalize on that, capitalize on tariff easing, will capitalize on international expansion, and they're going to put up great numbers. Like even the most bearish person on Nvidia is like, oh man, they're killing it. So looking at the stock price action, my only game plan is I bought more Nvidia a few days ago. I'm like, all-time high, largest cap company in the world. It really doesn't feel overvalued. I know you can look at it on just the PL and be like, well, there's things that trade cheaper like PayPal, and PayPal is too cheap and it shouldn't be. Nvidia, I think, is really easy money. So if this earnings, and throw this up real quick if you don't mind, I'll do the year to date here. If this earnings dumps for whatever reason, let's say they don't like a specific number here or commentary there, I know they're going to be very good earnings, barring some crazy thing like if Jensen says, well, I'm retiring. Well, that would be pretty bearish. They'd still just be fine. If there is any kind of a dip, I am buying that dip. Going into this, I am being careful with covered calls. Now, NVIDIA is not going to do what it did. Let me zoom out here. 5 years ago, you can see some of these massive, massive jumps when revenue really spiked initially in the AI run. We're not going to see that just because it's the law of big, that you're getting to this point where NVIDIA, I think the implied move when I looked at it earlier was around 7%. It may have shifted since I looked earlier this week. Could we see 200? Yes, we could absolutely see 200, especially if it's on a green macro day. Like 220, probably not. So I've actually sold a few covered calls for pennies there. I probably shouldn't have done it, just to be honest. But I've been ridiculously conservative with covered calls just because a lot of times too, NVIDIA, when they report earnings, the one thing that I wish they would add is that you could click a button and put the earnings dates on there. I'll remove that for now. There's many earnings where they have fantastic earnings, but they've gone on a colossal run. It's already priced in. It's done. It doesn't feel like that at this point. That doesn't mean that it's going to pop. But usually if they haven't popped the last few earnings, then they're a bit overdue. And it's kind of like just an impending eruption. Tevis for president. That's right. Can I be your VP?
I couldn't resist putting that up. Yes, you can be the VP. Absolutely. Tanner will hiring as an assistant. And that's the best you can do.
Soulman at 725, he said, people say this earnings is more important for the market rather than NVIDIA itself. So that's mostly true, mostly because prior to this, all the hyperscalers, and not just hyperscalers, but company after company, as they report, they're saying, hey, we're buying a whole lot more CapEx. Not all of that goes to NVIDIA, but a ton of it does. And so you kind of get the read of NVIDIA, where they're at as a company based on those comments without even seeing the numbers. So this is more telling as far as the overall, but I think that we also know enough data on that. Like this is an earnings season where early in the earnings season, this might have shifted at some point, but they had a close to 90% EPS beat ratio and I believe EPS was up close to 14% year over year for the companies that had reported at that point. This was a couple of weeks ago. That could have shifted. That's a very strong earnings season. Analysts are expecting not quite as strong as that, because I mean that's almost historic in modern times. But in quarter three, it's going to be very good as well. So with tariff noise also dying down, I mean, yeah, this is a company I don't want to lose. I'm being so careful with covered calls, Tevis, just because I know that you made a lot of money on Nvidia, and congratulations, and you do you, but I'm like, I'm some weeks even not selling covered calls because I'm like, it's not worth the risk. I want this company for a long term. I do not want what happened with Palantir and I got underwater to happen. And I also don't have, like, by share count, nearly as large a position. I have a large enough position as I'd like to have, but not nearly as large as, I'd be like, if I lose a couple hundred, I'm fine. It's like, no, if I lose a couple hundred, I don't have much left. I'll just put it that way.
Yeah, I think that Nvidia is a company that's going to obviously keep executing, and even if they might have a hiccup this time around, then that's a buying opportunity. And people think the sky is falling when Nvidia fell under $100 back in the spring, and I just bought a whole bunch of shares and I flipped them for 150 or 155 or something like this, and it was like a 50% gain in 3 months or 2 months. I'll take that any day of the week.
Yeah,
and yeah, and it's like, if I don't hold Nvidia long term, whatever, like I can use that money for other positions that I'm more bullish in. For example, I have Amazon right now that I bought after the earnings fall into 213, 214, and it's already back up to 230. And I'm writing covered calls on that. And if that goes at 240, like these companies, I think the Magnificent Seven are always going to be well capitalized, executing at the highest degree. Some of the best run companies in the world, they're going to be around. And if you can trade around the volatility to take advantage of the fact that these things get oversold from time to time, absolutely, I'll do that any day of the week. Now, do I want to hold Nvidia? Maybe one day, but right now I think there's better opportunities. Like I bought 1,000 shares of SoFi this week. So I'd rather hold that, and because I think that could double or triple, whereas Nvidia absolutely could double or triple. It's a matter of confidence level and time horizon.
Yeah, it's like me with Nebius. I was like, hey, this is a fine company, but I wasn't sure initially. I was like, invest and investigate, and I decided, I'll just make that a swing. Had really nice gains. I got out completely. I'm not a long-term shareholder. I think it's a good company, but I was looking. I'm like, I'd just rather have more Nvidia. So the nice thing is, did I sell at the top? No, not even close. Like it's in the 70s. So that's awesome for shareholders. I sold in the 40s. So it was some time ago, but I bought in the 20s, like 23, 24, and ended up pivoting in Nvidia at like 120. And so it's like, yeah, I would have made more money if I stayed in Nebius. I have stronger conviction in Nvidia, and I have enough volatility in my portfolio. I'm like, this is an anchor stock for me. It's very volatile for one of these large, like the largest market cap of a company in the world. But it's very secure with what they're doing. The stock will move up and down. If it moves down, it's just an opportunity for me to add more. If it moves up, yay. My covered calls are probably safe unless something absolutely crazy happens. It has before.
Are you winking or twitching, Tevis? I am absolutely winking at you, soul man. Yeah, I agree. I think everybody needs an anchor stock. Currently, for me, it's Amazon, which is the Mag 7 of choice that I have, because I think that one provides a good risk to reward ratio for me. I think Google would be another one, but I'm just frankly more bullish on Amazon for the time being. I don't see myself being in Amazon for years. I think that similar to Apple. Remember when we were doing the show and Apple fell, I think it was like whatever it was, like 260 or 160 or whatever the range was. I said, look, Apple hasn't shown their AI playbook yet. Like I'm literally on stream saying this. You can go back and watch. I said, Apple's going to have something for AI. I'm buying into WWDC. Apple announced something. It was kind of underwhelming, the Siri intelligence or whatever. And then the stock bounced up 35%, I think, in a couple of months. And so then I was out. And now it's Amazon. And it was Nvidia before Amazon. So I'm just cycling through these as like my anchor position when I think that I don't want to go completely balls to the wall with like all Tesla or SoFi or something like this. Hold on.
Elijah.
Yeah, my anchor stock is HIMS. That is something we can talk about, Elijah, because HIMS had some news today. I don't know if you saw, Roy, but
I was looking for that. It's Tuesday's one of my busiest days. I saw the move in the stock. I looked and I'm like, other than short interest, unless you're referring to short interest, that's the only thing I saw that stood out. But
that is what I am referring to. Let me share my screen. Let me make sure I'm sharing the right screen. And
not the left.
Not the left screen. No, we don't want to share that one. I posted about HIM's short interest record high. So here is the stock price overlaid onto the short interest. And as you can see, we have a record short interest for HIM's, over 70 million shares sold short. Fintel has it as 35.5% of short. I saw other reports around 39%. I don't know where they're getting their float numbers, but in either case, it is a record. And it comes on the back of HIM's stock price falling from $70 to the $40 range. Roy, what do you make of that?
I mean, like, shorts are greedy too.
Yeah.
I don't feel like that this is as extreme greed, despite the level as like when HIMS was in the high 30 or low 30s rather, and high 20s. At that point, I'm like, this is risky. This is stupid, especially going into the earnings previously. They had more weakness. Like this previous earnings, still bullish, but it was their worst earnings that they've had as a public company, at least that I've seen. Maybe they had some like way back in the day that I've not looked at, but I don't think so. There was some weakness there beyond just GLP-1 slowdown. Yes, they're still growing very fast year over year, but that looks like it's going to slow down quite a bit, especially if the core is any indicator. They have a lot of tailwinds, of course, starting early next year as well. And we'll see how testosterone does in the second half here, but we're already in the second half, and where's the product? So short interest kind of makes some sense. I think that there's still some that are waiting for that lawsuit, and perhaps they were seeing the opposite of what I was saying, that, hey, Novo Nordisk suing all these places and not naming HIMS means HIMS is next. And it could be, but if they're waiting for legal precedents and to go that route, that takes a lot of time. So these guys, I don't know, like they're paying. Yeah, I think that they may end up really regretting this position, because when HIMS gets down here, like we see moves like 5% on like nothing. It's like, hey, we're moving up 5%, no big deal. 10%, no big deal. So I'm skeptical that at this point, just because of the way that Novo Nordisk went around at that, whatever route they're going, they did not name HIMS. If they're waiting for legal precedent, that usually takes a long time to play out in courts, especially if they're not just set. Well, if they're settling things, then it doesn't establish precedent. If they're fighting, court cases take time. You have to allow them to collect evidence. You have to go through a lot of multiple different hearings, appeal processes, everything. So, I mean, HIMS is really safe, I think, for now from the lawsuits. I could be wrong. I'd have people that disagree. So I don't see what the thesis is, other than like it's kind of expensive. And if you're shorting a stock that's profitable, that's growing, that is capable of launching and accelerating at a moment's notice, I think you're making a mistake if it's purely based on valuation. So I don't see what their thesis is. I think this is really stupid.
Yeah.
Dangerous.
Fair. Roy, do you want to throw up the Starship or you don't want to do that? I'm watching it on my other screen right now, and it's coming down as we speak.
Okay, throw it up real quick.
All right. Here is the Starship launch. This is live, of course. Flight test 10, and that's coming down to land. And we'll see if it actually lands or if it crashes and burns. We didn't see the launch. We're just seeing the landing. And here we go. I'm doing the commentating because I don't want to turn on the volume.
So
probably going to get monetized anyways. Here we go.
If SpaceX was public right now,
of course,
would you invest in it?
Yes, absolutely. Honestly, SpaceX right now has a cheaper valuation than OpenAI does.
Yeah, OpenAI is I don't know. Like Tanner's mentioned a couple of times that he'd love to invest in it, 500 billion. I'm like, I don't get it. SpaceX, yeah, I mean, I'd pay a hefty premium for that. It's an interesting. Now the other piece.
This is not our internet. It's the connection feed of the actual rocket that's trying to land that cut out. Go ahead, Roy.
Yeah, if SpaceX can't provide internet in space, like, I mean, what are they doing? Come on.
Yeah, well, I think they would make a lot of money through Starlink, man. And Elon previously, I think back in 2022 or so, said that the moment that Starlink becomes sustainably profitable, that they would spin that off and IPO Starlink separately. I don't know if that's still the plan, but Starlink was essentially going to be the piggy bank for SpaceX to be able to fund their Mars missions, because like they get a lot of money through people having internet through Starlink.
So while we're looking at an Elon company, let's also talk about an Elon company that we can actually own, since it can't be this one. A lot of Tesla stuff has come out. A lot of kind of little things that add up quite nicely. Of course, delivery numbers should be out relatively soon. That's one of the reasons why I saw that predictions market post, which is interesting. We'll see, how they do in the third quarter. I think that's going to be massive, just because the demand lever has been drawn forward. Tesla Model Y L. Have you seen that one, Tevis?
Yeah, I have briefly. I haven't been keeping as close to Tesla ever since I cut my position in half as I probably should, but I did see that. Yeah.
So it's sold out in China through September.
Yeah.
They apparently, like everything that I've read, and there's enough haters from Elon Musk that if this was not true, they would post it otherwise. But everything that I've read is the Chinese market is absolutely going crazy for this vehicle. It seems, I mean, like, we love our Y. So even if they had like just a tiny tweak, it's a great vehicle. But this is going to do very well. Chinese cells have been very strong for Tesla for a while. This, I think, might really accelerate that, especially if they continue to see this kind of rampant demand. And of course, this is a product that they can bring, for them internationally, here to the United States, and just continue to grow into that next vector. So there's going to be a lot of headwinds in Q4, especially when they first lose that EV tax credit. It's just kind of the way that works. But I mean, this is not a company that's dead in the water. The other piece of news is that I saw was that they ended up increasing the service area in Austin for robotaxis. So that continues to progress. Austin, I mean, I'm like 2.5 hours away from it, so 3 hours. I've driven around there. It's not the easiest city to drive in. Like the little section that was before, I wasn't. That's interesting. Things falling off of it.
I think it's just debris. Look at that, though. That's beautiful.
Yeah.
At the bottom. So
what a planet.
Yeah, man. Flat earthers are punching air right
Oh man. But yeah, so I'm glad that I'm fine with not have buying more Tesla. Like, it's just easier to buy Nvidia and hold that and wait for opportunities that I think will, Tesla tends to gift as far as being into the stock. But there's a lot of things actually going pretty right right now. We'll have to see how they do the second half of the year. But I don't know. They're it's still Tesla. It's still an Elon company. I hate to bet against Elon.
Yeah, dude. I just like the more he posts about these AI anime porn girls, it's just the more I just shake my head, because I just want him to focus on Tesla. But I mean, I guess the guy can do multiple things at once, is what he's proven. I don't love that direction. He's just focusing a lot on XAI, and I understand that's probably the new shiny object that needs the most attention, and that Tesla is probably kind of boring to him right now. That SpaceX is as mature as Tesla is as a company, but the mission, I think, is more exciting. Yeah, I just don't know. I want him to be in full on like wartime CEO mode, and I don't think he's had that ever since the Twitter acquisition.
Yeah, not with Tesla. You would think that Starship would be a big and shiny enough object, but I guess not.
Thank you, Chip Diamond, for the $2. Sold 200 SoFi for 1 ETH. SoFi 230 or ETH double first. You know, there's no word limit on these comments. You can actually like write a full sentence, Chip. But hey, look, we can talk about ETH and we can talk about BMNR. I think there were some questions around it as well. I know Tom Lee is really bullish on Ethereum. I'm also really bullish on SoFi. I don't know which one doubles first. I think SoFi, quite frankly, it took Ethereum years to break to a new all-time high with it hitting 5,000. And I think that SoFi has a lot going for it, and its management team is incentivized to double the stock in the next 6 months or so, because they have to hold it there for an average of 90 days. So
Yeah.
Bro.
Thanks for the extra.
Yeah, so that would be my answer, and we're gonna answer all of your questions towards the end. It's just that
unless you pay Tevis $2 for it.
Unless
he did say SoFi to $30 or Ethereum double first. Which happens first?
Oh, then easily SoFi to 30. Dude, what are you talking about? SoFi's at $26. Like it's $4 away.
It fell like 2% today. It's over, Tevis. It's clearly over. Stocks only ever go up until it's over. No, just kidding.
Going to zero.
Yeah, I mean, like we'll talk about this on FinTech Fridays. Used to be SoFi Wkly. All-time high. I mean, it's not inevitable, but it feels inevitable this year. Like easy.
Chip,
$30 feels easy.
When did you sell your 200 shares, Chip? Because if it was yesterday, then I probably own those shares in my portfolio right now. I bought them from you.
That's a top signal right there.
That is a top signal right there. Hey, I haven't bought Ethereum in years, so there you go. That's the answer you needed.
So you did buy Ethereum. I was like, am I hearing him right? So all right. Yeah, I've been averaging into Ethereum. I bought like basically not really at the bottom, but right before the run. I bought like not even a full Ethereum, but I'm a whole coiner now, at least on that, not on Bitcoin, but yeah, maybe one day.
I think I own like 3 or 4. But like I bought it back in 2020, 2019. So I bought it under 1K when I bought it. Bought it for like $300, $400 or something. So I've been holding Ethereum for like 6 years, man.
Yeah, so Ethereum is it's tough because crypto doesn't trade on fundamentals. Like there's not fundamental. I mean, you can look at volume, you can look at real world projects, you can look at on chain activity, all sorts of different things. But like as far as like price to earnings, like that's not normal for crypto. There are crypto companies that make money, but the asset itself, no. Ethereum's interesting because unless you think stable coins will not be a thing and tokenization will not be a thing, there is no chance that Ethereum doesn't have a large part of the future. One of the things that it's going strongly with it is, of course, there's a lot of projects that are built on Ethereum, a lot of developers that know how to use that ecosystem, which is really good for further development. Plus, Ethereum is more secure just because it's decentralized. Is it perfect chain? No, like Solana is more efficient, it's faster, but it is also heavily centralized, and we've seen some issues with it on chain as a result. So there's a place, I think, for Solana. I have a little bit of Solana. Yes, I'm a whole coiner in Solana because it's like $100, multiple coins. But Ethereum is like the asset I think that a lot of this is going to build on. Stable coins need to have a chain like Ethereum to be able to run on. It doesn't have to be Ethereum. A lot of the stable coins, if you look at Circle, for instance, or USDC, Tether, even PayUSD are on multiple different chains. But a lot of the activity, in fact, most is on Ethereum for a reason. Tokenization as well, as real world assets are tokenized, loans perhaps, according to Athenodo, they're tokenized, deposits for banks being tokenized. It's hard for me to imagine that happening in mass outside of the chain of Ethereum. And it's one of those assets where, unlike Solana, you can buy it, but it's a inflationary asset. There's no real burn there, but they do give the staking that's a little bit higher than, actually quite a bit higher than the inflation and supply there. But Ethereum is not like that. It's not finite like Bitcoin. It's not the same as Bitcoin. I prefer Bitcoin over Ethereum, but they just serve different functions. Bitcoin is gold, Ethereum is silver, and silver is meant to be spent or back an economic system. So, man, it's hard to be bearish on Ethereum. Tom Lee is absolutely right. And when he like put that together in my mind, I had both separate thoughts on, yes, stable coins. Yeah, crypto's good. And then he's like, yep, stable coins because Ethereum, or Ethereum because of stable coins. I'm like, okay, yeah, that's right. I'm going to load up here. Wish I bought a whole coin at that point. Wish I bought multiple coins, but hey, I've got some now.
I mean, I'm bullish on both. I own both. I have been owning both for years. I bought both at around the same time because, quite frankly, I don't know, who's going to win that race or to what degree. I think that Bitcoin is going to be the rising tide that raises all of the boats, cyclically, of course. But yeah, I'm not there. I don't have anything bad to say about Ethereum. I understand the utility aspect. Chip, big baller chip with another $2, sold at 26.30 today. Seen ETH at the bottom. I bought.
Yeah.
I hope that trade works out for you, Chip. I don't hate it. I own both SoFi and Ethereum, so I'm bullish on both.
Yeah, and this is like a problem that everybody has. You, even if you're like Tevis and you're a billionaire, you still have finite funds, and as a result, I mean, don't deny. No, just kidding. As a result, like you can do one of two things. You can invest a little in everything, in which case, just do an ETF. Like, there's great ETFs out there. Maybe a few ETFs, that's fine. There's nothing wrong with that. Or you can do some of that. There's always a threshold, but concentrate in your core convictions. So, for instance, like Amazon's one of those companies. Tevis talked about it earlier. Great company. I think they have a lot of upside potential as well. But there's always something else that I'm like, oh man, Amazon's good, but man, Nvidia here is great. I got to get that. Or yeah, Amazon's good, but Aehr Test Systems, dude, that is a real opportunity. Let me get in there. Amazon is great, but PayPal is even better. Well, yeah, it's PayPal, but yeah. I'm going to buy any more anyway.
Let's talk about Aehr Test Systems, and right. I want you to share your screen and to throw it up, so I can go off screen for a second and be right back.
Yeah. Let me pull up.
Oh my gosh, Chip Diamond with the $10. He says, leaves me with 22,000 shares of SoFi at $6.75. Chip, thank you for the $10, but also fuck you, man, because I am so incredibly jealous of that position. That is the sexiest position of SoFi that I have seen. Putting the diamond in Chip Diamond, everybody. Holy crap. 22,000 shares SoFi at under $7.
That's amazing.
Wow. That is amazing. You enjoy that, sir.
Yeah.
Roy, talk about Aehr Test Systems, and I'll be right back.
Yeah. So this is one I think I've talked about here before. I've talked about it like in multiple streams. I haven't done a separate video. I've done a few little posts on X, not a thorough one. Those are probably coming out in the next couple of weeks, like very thorough. There will be a not as thorough video tomorrow on like the process that brought me to Aehr. And then I'll try to do a deep dive before the Robinhood Summit. Just a lot to do between now and then in my personal life too. But regardless, this is Aehr Test Systems. Aehr Test Systems, just as a reminder, basically they are involved in the AI trade. They're more than just that. Basically, they do testing, burn-in, usually wafer tests, although they do have parts production tests as well for those very expensive chipsets. And they've been doing this for a very long time. Like this is one of those companies that if you at all, well, it doesn't go back as far as this company has been around, but they've been around a very, very long time, since the 90s. So they also test, they have a lot of other small products, but the thing that's actually driving the stock in both directions, we'll do the last year, maybe a little bit further out here as well. They, during COVID, really ramped up. This is 2023. They're trading significantly higher back then. And a lot of this was because of basically silicon carbide. They largely test silicon carbide, gallium nitride, and silicon photonics. I'll do a little bit of breakdown of each. The photonics part, I don't feel like I understand enough, but I mean, it's time to do a deep dive anyway. So because of silicon carbide, which is largely used in EV vehicles, during COVID and as EVs accelerated, you can see like their stock went from dead in the water to up a ridiculous 3,000%, and then came back down to earth, of course, right there during the tariff woes. This is a company that is profitable, by the way. You look at their balance sheet, it's squeaky clean. They don't have a ton of cash on it. They actually just did an acquisition. And that acquisition was for Incal. It was a competitor. There's a lot of small, very specialized niche competitors. Incal had these Sonoma units, which they were able to use for gallium nitride. Gallium nitride, basically, so they sold off because EVs are awesome. They're great. They're still using their technology. The TAM is still there. They're still doing just fine as a company. But the growth, as far as if you look at EV companies, including Tesla, is just really not there right now. And so a lot of that has been taken off the top. Now they're rising again because gallium nitride. Gallium nitride is, I wouldn't say new technology, but it's newer. It hasn't been utilized nearly as much. And these are typically used in data centers at this point. It's better for high voltage applications and for data center applications. Double check, by the way, everything that I'm saying, because I'm new enough in Aehr that there's things that I'm learning every single day, including, by the way, 2 big press releases that they did recently. So you can see the movements here in the last few days. One of these was nearly a 40% move, and then today it moved up 5.53%. Basically, what happened is in their prior earnings, Gain Erickson talked about this massive opportunity. They talked about it, by the way, in the past, and they said, hey, one of our current users is asking us to be able to figure out a way to test GaN, gallium nitride, and be able to do this on the wafer level. So instead of just one part by itself is just a lid, but one part by itself or one package part by itself that's already a completed product, they have the whole sheet there that they're able to test all at once. And usually for these Sonoma units that they have, by the way, 9 levels deep as well. So they can test a lot more efficiently, a lot more effectively, a lot more all at once. And they're not having to, it's basically a lot lower cost. And so as a result, they're able to test for a lot longer. It's a complicated enough process. It's specialized enough that none of the manufacturers are actually going to get into this. There are some that do a lot of different things, but Aehr Test Systems is the only one that does the package part business and also the wafer level business. Now, specifically with gallium nitride, the Sonoma units, which got the market excited the previous day, and then this one was the Fox XP package part system. So basically opposite ends of the business. Aehr is the only company in the world right now that can do wafer level, so these whole sheet testing of gallium nitride products. They're it. They back not quite 9 months ago, close to 9 months ago, were not even sure if the technology was possible to do. They told this customer that when they were like, hey, can you guys figure out how we do this? They said, we'll try. We'll see what we can do. They figured it out. There was a lot of skeptics, even though this company has been around a long time. They don't just pump up things. They don't just say things. They don't overpromise and underdeliver. And now that they're actually delivering and shipping those Sonoma units, which, by the way, they announced one about a month ago, that caused this massive spike. I saw it and it was trading at like $17 a share. I'm like, okay, this is stupid. I'm buying more, and I'm buying more right now. And as we came back down, I finished out my position, thankfully in time for these massive moves. So if you look at the market size, if you look at how it's accelerating for data centers, if you look at the product that they have and what he's saying very clearly about the customer appetite, the interest, the demand, this is a longer sell cycle. It's not something that they can just say, okay, great, you're buying a product, we'll ship it out through Amazon Prime, it'll be delivered in the next day. No, they've got to qualify the customer. They have to make sure that what they have will actually work for the customer, which, by the way, was the news from today, not selling additional units. This, by the way, was from a leading hyperscaler. I wonder who that could be. And this also was a test for the Fox XP systems as well. They're going to see a lot of this over the next couple of years. I wouldn't expect like big 40% moves every single day, but they're a micro cap, so they're going to have a high degree of beta as well. But man, I'm very glad that I got my position built out before these 2 big moves. I'm glad I'm careful with covered calls in it, and I'll try to do a more detailed post in the future. But it's not every time when you invest in a company and a month later it's up a lot. I was buying in the 14s, so
Yeah, that was a terrific call. So congrats to you. I mean, obviously, we talked about it on this show when you were buying, why you were buying. We covered it in multiple streams, and it's up quite a bit now.
Yeah,
So definitely congrats.
let me throw up like one other thing. I won't go through all of it, but I like this. The CEO has like this is his thing. Like he's in this business. He's a domain expert here as well. Whenever they do news releases, this is from today. The one yesterday, it's a similar great read. Some of the comments he made basically in the prior quarter earnings. They don't just say, "Hey, we've got somebody doing a purchase to be able to test the wafer level burn-in system." So actually I had it backwards with the wafer pack. That's a recurring revenue, by the way. So they do have some of that, although it's always going to be lumpy because these are massive units. But he goes through and talks about going back to the commentary that they had. Basically, like things are happening exactly like the CEO had said, although they were very cautious of what they're doing. Yeah, I mean, pretty much. We might need to do that at some point.
That would be a nice episode if you were to do it on that. If you think it's still a great buying opportunity, we can organize that.
So this for me, it's like it's a long-term thing. It's not a swing trade. I think it's going to be very volatile. There'll probably be lower buying entries. I might add a little bit too, but you know, I got it up to about 5% of my portfolio. Now it's a good bit more. It's like 7-8%. But this right here, we believe this represents a significant step forward in our engagement with this top tier AI processor supplier. And, you know, they say, you know, well, there's no guarantees, but he goes through and talks about the opportunity. He reminds people of what these do, why it's important, the overall TAM, how they're differentiated here with the Fox XP systems. A lot of very technical stuff in some of these other news releases as well. And I'm a details guy. Like you can just look at the stock price and be like, hey, Aehr to the moon, this is great. But like, I love having these details. I love, like he was asked this question in the prior earnings, which they have an earnings in, I believe, October. They're weird, like as far as the timing of their earnings. It might be late September. I'll have to double check. But he basically was asked by a analyst, like, okay, tell us about the TAM for GaN, for this gallium nitride wafer level testing. Like how many companies are there that actually do that? How many units do you think? And he went through like, okay, the units, we sell them for this. There are this many companies that need this amount of product that we estimate in the next 5 years. And so you can do the math. And like literally, you can do the math. Even assuming that they capture like 20% of that, guys, there's a lot of upside here with just that one product. So that's why the market is like freaking out about Aehr, like especially yesterday, because they're selling these units. And usually when the demand, so in essence, what's happening with AI and data centers is a freaking gold rush. And while the gold rush is good, and this is again a wave, not a bubble, you want as many picks and shovels in the gold mine, digging those up, panning and doing all you can. And so the guy that's supplying it, and this is part of that supply chain, the testing process is very important. These are very, very valuable units that there's massive ramifications if you have a higher failure rate, especially for data center applications. You can't do that. They have the best pick out there, period, of anybody. And it's high demand and it's so specialized, but also yet small enough. Like like Nvidia or TSM rather is not going to be like, oh man, $6 million a unit. Yeah, we can't do that, dude. They can and they will. So they're just positioned so freaking well. And when I looked at the company, it was like trading at a 14 PE. They're profitable. They have no debt. I'm like, okay, this is easy. 500 billion. Not 500 billion, 500 million market cap. Now it's larger because it's run, but like it's easy. So yeah.
We absolutely need to get you onto a Stock Tank episode because I agree with Brock here. You can feel the excitement that Roy has, and he's been right on many names, and this is no different. This thing has gone up from when he first started talking about it. A lot of it goes over my head because I'm kind of a dum-dum. But yeah, we need a full episode dedicated to this, so I can ask my questions, and I think a lot of people would find that interesting, especially because this is sort of off the beaten path for a lot of people in FinTwit, right? The people in FinTwit are gushing over Duolingo and Hymns and Nebius and now Lemonade and all of these companies, Palantirs and whatnot. And I think Aehr technology, Aehr test systems, nobody's heard of that. Nobody's buying that. And that is exciting to me. I think that's going to be really exciting. Okay, I got to read some of these donations. I said I wouldn't put this up from Chip, but then he said Tanner put it up on his screen, so I'm going to put it up. Thank you, Chip, for the $10. Thank you, Jason, for the $5. Big shout out to Tevis, SoFi at $5, Hims at $13, and for introducing me to Tanner, Roy, and Chris. Should have kept holding Tesla though. It's still 7% of my portfolio, Jason. Thank you so much. I really appreciate you being a viewer of the channel for years. And I'm glad you made money off of those. Chip donated another $10 to Roy, saying, because I bought Aehr at 20 when you posted a few days ago, and I still own Nebius too. Chip, I want you to be my best friend because you are a very rich man from the sounds of it. Brock says, Bootleg Weekly is the only pod I schedule other things around. We love you around here, Brock. Yeah. So thank you for that.
Yeah, and you guys make the show. You're awesome. Thanks, especially for when I'm late or when we need to change the time. You guys are always there. Makes it fun. Before we pivot to Q&A, did you have anything else, Tevis?
Lots of other topics. So let me go back to the list. And we talked about Cracker Barrel. We talked about the Aehr rally. We talked about Tesla delivery numbers. We talked about the Hims short interest. Duolingo. Did you see what came out for Duolingo today?
The Google stuff. Yeah.
Wow. Josh, thank you for being here, not on Tanner's channel. Everyone who's here is not on Tanner's channel because he's also live with like 800 people right now. And we appreciate all of you because everybody else sucks. Yeah, let me throw that up, Roy. So Duolingo fell about 10% intraday, and it closed off about 3%, 4% down today. Well, it recovered, so it closed down about 2%. And this was why. And I'd love to get all of your thoughts on this. Thank you, Joseph Kelly. TechCrunch came out 9 a.m. Pacific time at noon Eastern, basically. And they said Google Translate takes on Duolingo with new language learning tools. Jared gave Tanner $1. He doesn't need it. I'm just kidding. I love Tanner. Google is rolling out a new AI-powered experimental feature in Google Translate designed to help people practice and learn a new language. The capability announced on Tuesday, Translate is also gaining new live capabilities, making it easier to communicate in real time with a person speaking a different language. Here you can see a little mock-up of what it might look like. And Roy, does that look like kind of familiar UI to you?
Yes. I wouldn't be surprised if even the font is similar. It's been a while since I've been in Duolingo, but yeah, it's I don't know. Like, I've not used it. I could be wrong, but I think Chris did a good job in the Duolingo episode Stock Take episode where he pitched Duolingo, talking about like why this really isn't a threat, that it's not. Google specializes in the translation. Yes, there will be AI, including now Google, that get into this type of market and space. But I mean, Duolingo is very refined for the individual user. People use it. They love it. It's very sticky. It does a great job of motivating you, sometimes by death threats from Duo, to continue your progress. Now, what did you think of this, Tevis? Was this enough for you to get out or buy more, or what did you do?
Well, first of all, thank you, Brock, for the 5 memberships. Really appreciate that. I agree with Sagig here. Google Translate to Duolingo reminds me of what Amazon was to Hims. Do you remember when Hims started dropping on the fact that Amazon was going to encroach on their turf? And literally nothing has happened. I haven't seen any updates with regards to that news. I think that my bull case around Duolingo is that their value prop, their moat, so to speak, is how they teach, not what they teach. Yes, there's going to be other apps that are teaching languages, and yes, bigger companies, but Duolingo's value proposition and their gamified user experience, I think, is unique. And their testing culture on top of that, that leads to that experience, is unique. And so I think that, can Google, completely disrupt them? Yes, if Google actually dedicates all of their effort to encapsulating the methodologies and the culture that Duolingo has fostered over years. Realistically, will it happen? No. Google is one of those companies that they have their tentacles in many, many, many different industries, similar to Amazon with hymns, right? If Google were to dedicate all of their efforts on language learning for whatever reason, then yeah, they can absolutely disrupt Duolingo. If JP Morgan were to dedicate all of their efforts to crushing SoFi, yes, they can definitely crush SoFi. My point is that these companies are so massive that they're so spread thin across different verticals that they're going to capture a semblance of the market here. But I think that people on Duolingo are more sticky than what I'm seeing here. And I think that's going to hold true as given their daily active user numbers. If you look at the engagement metrics that people on Duolingo have, I don't think that they're going to disrupt or go off platform to adopt Google's platform. Like, that's not why they were on Duolingo in the first place.
So two things. One is I don't think Google is even capable of disrupting Duolingo. It would be if Duolingo really didn't have a freemium access level. Then it could be like, we're giving away free. This is a Microsoft Teams versus Slack. Best product does not always win in that equation. But here, Duolingo, I mean, it's free to use. Now, Duolingo, though, they can disrupt themselves. And, they've made some missteps. It's one of the reasons why the stock price is down. My younger brother actually messaged me literally while we were talking about this. So I don't know if he's watching live, but if you are, hello, brother. But he said he sent me a message earlier on Duolingo. They use it actively, and basically said that the shift with energy, and I've not used Duolingo since I think 2022, 2021, is instead of penalizing you for making mistakes, he feels like the energy penalizes you for making progress, which effectively kills off the freemium model, other than just enough progress to feel good about yourself, I guess, not to really learn and go deep. So I don't know if a lot of people are experiencing that or would agree necessarily. Again, I've not used it since they've made this change. So maybe they're disrupting themselves.
It's possible. I think that one thing I'm really going to be interested to see with Duolingo, and by the way, what I did today with Duolingo is I rolled out my cash secured puts. I had 335s for this Friday, and I rolled them out to 330 for September 12th. I think I could see myself writing more on Duolingo over September 16th, because September 16th is their product day. And depending on how that goes, if they announce something or what their company direction looks like, or whether they give any indication that these boycotts are over and they're dying down, then I think that will be a big determining factor of whether I build this into a larger long-term position or whether this is a trade that worked out or didn't work out, however the stock ends up being by that time. Because I want to know that this company has staying power. I want to know that it's sticky. I want to know that it's disruptive. And I want to know that they plan to dominate when they expand into other subjects that are not languages. Math, music, chess, whatever, science later on, all of these subjects, even things that are even more gamified. Like chess is a game in itself. Mm-hmm. Like you're gamifying the process of learning a game.
Yeah, I've not fully figured out what I'm doing with Duolingo. I have a small position. To give you guys an idea, it's not large enough to even sell covered calls on. But I'm like, okay, am I just swinging that for a loss or going long? In the past, I've regretted not going long, so I might go either way. I think that this event in September, depending on what they show off, and I'll take some time. I won't be like the first thing that they see, I don't like, I'm done. I don't think so. That'll probably determine how long I'll own this, whether it's going to be a long-term hold or, I'm good.
Yeah, same here. Duolingo's small position. I think I only have like 100 shares and my cash secured put. and I can roll, like I can basically get out of that position tomorrow if I really wanted to. But we'll see what happens with it. I'm not really committing to more with Duolingo until I see that product day, which is coming in a couple of weeks. So I could have written more cash secured puts. I wrote them on Nebius instead. We'll see what happens. And I think that's my spiel on Duolingo. Last topic I had here was Kanye, Solana, meme coin, rug pull. I don't really want to talk about that. Maybe we talk about this PayPal head of CEO content, because that's kind of interesting.
Yeah, that's a posting that I don't know who originally found it, but a lot of people pointed it out. And frankly, if I didn't have my dream job, which it doesn't pay the salary of what this is offering, but if I didn't have my dream job already, high satisfaction, love it, love what I'm doing, and it really is a dream job for me. I would be applying all over this. So in essence, you are heading the efforts to create CEO content. Alex Chris does do a lot of engagement, a lot more, some with retail as well. And so looking at this position in the description, are you trying to load it up? Nothing's on my screen. Oh, there you go. It's lagging. There you go. I think it's great as a shareholder. Any time that I get more information on companies that I own, like the Aehr test systems, when they drop that and it's just full of dense detail, but you get the cliff notes if you don't have time or you don't have interest. That's just fantastic. And so Alex is also very compelling and very engaging when he's not reading from a script. Like he's one of the best. He really is. When he's reading from a script, he can be a little bit dry. And so this is probably also going to help, him point out these things and be like, hey, maybe go unscripted, or, do what I do when I have to give a long speech. I'll have like bullet points that I'll follow just to keep me from chasing rabbits. But if I write the script, I'm as dry as my brother is. So yeah, but I love this. I think it's a good thing. I don't know that necessarily every company needs to do this, or even every retail facing, but like, how much would we love it if they're like, okay, Anthony Noto, he's engaging a little bit more with people, but we know that we have a large retail audience, and a lot of those are users of the product. Why don't we really up our game and have a head of CEO content? I mean, great. That's awesome. And frankly, Noto is the perfect fit for CEO. So I'm not meaning this as a slight, but just the way that he communicates is not really as conducive to even this type of environment, but it would still be amazing. I would love that.
So in fact, Sagig, the person that left Duolingo, she joined as head of social on DoorDash. I don't know if you guys have heard that. She announced it on LinkedIn. So DoorDash gets that person. Look, I think with regards to this role, it's really interesting, right? Because we're entering an era of influencers having more power, let's say, in terms of driving behaviors of their audiences. Like if somebody's been watching this channel for 5 years and we say, hey, go buy product A, and that same person gets ads on product B, they're more likely today to go buy product A because of that parasocial relationship and whatnot. So that's just the case. We're seeing a lot more retail investors or a lot more influencers, like Vlad's doing more podcasts, interviews with people who have just been on the come up. Mr. Beast was instrumental in this, and just all of these individuals, like Jeremy, I think is like the OG godfather of finance content on YouTube. Before I made content, I was watching Jeremy's content, and so I think that's layer one. And now it's really interesting because that first layer adds a level of validity to a personal brand of people essentially tuning in. Before, they might have been tuning in because they follow PayPal or they follow Palantir, but now they're tuning in because they like Roy. And if Roy starts talking about Aehr test systems, then so be it. And so there's a diversification, there's a bifurcation of what that person is talking about and what their audience is there for. And as a result of that parasocial relationship. And I think that personal brand is so important going into the next decade because of that, because you're centralizing where you dedicate your attention for somebody just watching on the internet. And that's something that every CEO is going to have to capitalize on to build that trust in an organic fashion. Anthony Noto right now, he has like 100,000 followers on X. And if you look a couple of years ago, it was a fraction of that. And I think a big reason for that is the social media surge that SoFi has had as a result of retail investors in the FinTwit space, right? Because people are talking about the stock, people are talking about the CEO. The CEO gets way more attention. Everybody knows who Anthony Noto is. Everybody knows who Vlad Tenev is. All of these people. And so at the end of the day, I think it's very smart to lean into that. It's one of the reasons why we're talking about that person on Duolingo. They're just a random person doing their job in a random marketing department in a random company. But now, because we're talking about it, like people know her name because she's driven real value in that brand. And so I think that CEO is leaning into this for it to be a formalized job, and the KPI, the key deliverable of that job being to build a stronger personal brand for that CEO, leads to a disproportionate level of trust with that audience. And ultimately, it adds a layer of sustainable growth at scale for that brand. So PayPal, everybody knows PayPal. Now, how they might feel when they see the PayPal brand is completely different between person to person, whether they think it's a dying legacy business or it's some, completely remodeled type of business. The idea is for Alex Chris as an individual to be synergistic with PayPal and even maybe eclipse PayPal in terms of that level of popularity or that level of approachableness, if that's a word, approachability. Because I know Coinbase, I also know Brian Armstrong, I know, Robinhood, I also know Vlad Tenev. There are these people, these CEOs who are very active, and as a result of being very active, their brands get more recognition. And I think that for that reason, more CEOs should start doing it, because by doing so, they lean fully into and embrace the fact that this influencer paradigm that we just so happen to be in is what sells. Sorry, that's a very long-winded way of saying I'm bullish.
Yeah, too long, didn't read. No, I think it's great. An additional level of information for shareholders. It's always welcome. It's good. And I love the direction that many companies are taking with being more engaging. This isn't necessarily specifically for retail, but some of it certainly is going to have that in mind. So, I mean, it's great. Yeah. And yeah, Varun, I see your comment. If I took a roll with PayPal One, that you'd stop believing, because I'd probably have to stop talking about PayPal, I think, and maybe many other stocks too. My whole life would be very different, and that'd be a neat opportunity. If I didn't have this where I'm at right now, I would be very interested in that. To the extent I put it in my channel, my wife, when I shared that with her, she's like, "You should apply to that." Yeah, but I told her, it's no, I love where I'm at. I love what I'm doing. And I feel like I'm making a real difference. Not that, I wouldn't necessarily there, but I'm sure that there's probably people that are actually going to be better at that role than I am. They won't know PayPal probably as well, but I don't know.
Yeah, I completely agree. Your brand is your sparkling personality, Tevis. Look, man, I love that, Brock, but my brand is eating 50 rolls of sushi on stream and saying some dumb shit from time to time and being kind of unfiltered and just laughing until I almost pass out, which I've done on many episodes of what was once known as SoFi Weekly. Yeah, let's go to questions, shall we?
Yes, my favorite part.
All right. What was up with HIMS today? We answered this. Any thoughts on Duolingo? We answered this. Jeremy closed his short position on Duolingo. Did you see this? It was a nice trade for him. I think he profited 19K.
I didn't, but yeah, it makes sense. You don't hold shorts long term. There is unlimited downside and there's limited upside. Unless you think a company is going bankrupt, you take your profits and you go.
Yep. And let's take a look. Any thoughts on Webull? We both are out of Webull currently. Go ahead, Rick.
Yeah. There's that comment, and then related to it, SG Kumar at 820 asked about eToro. These I looked into about the same time. Webull initially, eToro 2 weeks later, both IPO'd this year. Kind of similar setup. Webull itself, I think I broke even on it. Didn't make money, didn't lose money. Saw a great opportunity. I still think that that's true. I just trust leadership less. And looking at Webull, the whole time, you know, I believe that I was saying this, correct me if wrong, but I was like, okay, it's not the same quality as Robinhood. It's not as a business. And you can see that in terms of execution. You can look at it in their balance sheet, their proxy materials. But that doesn't mean that there's not a great opportunity. For instance, otherwise, like we just all invest in Nvidia and that's all we own. Well, no, there's other great companies there that are worth owning too. So looking at Webull, I'm like, it's not quite as great as a business as Robinhood. Doesn't have as many vectors, but there's a lot of nice elements too. Now they did the dilution in a weird way that I didn't really like. Tevis didn't really like. A lot of bulls didn't like, and so we got out of it. eToro is an interesting setup. Devin Ryan is, if you have access to his reports from First Citizens, he's a great analyst. He's actually like number 7 as far as analysts out of the world. Ridiculous performance, and he's brilliant. I've gotten a chance to meet him in person once. And Tanner, by the way, had done an interview with him, so check that out. But he basically singled eToro out as a sleeper pick. So I took a look at it, and again, as I was looking with Webull, I was looking at eToro, and I'm like, it's interesting. I see some opportunity there, but again, it's not as strong of a business. It's not a Robinhood. It's like the generic version of Robinhood. That doesn't mean that there's not upside. It doesn't mean that there's potential. Devin Ryan thinks it's going to do fantastically. Myself, I decided, you know what? I did the invest and investigate. As I investigated, I was like, yeah, I'm good. And so I made a few bucks on it, but I got it.
Yeah, and look, I think the biggest sleeper pick in 100% plus gain this year was a company that recently just got into the S&P, and that's Interactive Brokers.
Yeah.
Of that same stock, no pun intended, of the eToros and the Weebulls and the Robinhoods of the world, and to some degree the SoFis of the world, from a brokerage perspective. So I think like if you're bullish on a sector, there's value in looking at different names and trying to find some type of arbitrage between them from an execution perspective, because some of these companies will execute to a higher degree and some to a lesser degree. That's just the way of the world. And so I think if you had bought Interactive Brokers and you had held them through, you would have been very happy because you would have profited. I haven't looked at eToro personally. I have looked at Webull. I mean, one of the things that I liked about Webull was that they had the same product playbook as Robinhood. What I don't know is whether they will have the same execution as Robinhood.
No.
Will they have the same market as Robinhood? Most likely, but they're going to have more international as opposed to more North American. But the point is, if you're bullish on the idea of, you know, retail investing and trading volumes going up and just brokerages in general, then you're going to do very well.
Yeah, with one difference further too. I used Webull for many years. I still do use Webull, by the way. It's the most of my assets are on Robinhood. Actually, ironically, my Webull portfolio is outperforming my Robinhood portfolio this year. So go figure. I had more SoFi in it. So I mean, that's just it's not nice. But yeah, it's just I prefer a concentrated portfolio. Probably be fine. But all right.
All right, let's go to the next question. There's a whole bunch. How come no one is suing the government for the Intel stake? I suppose everyone's afraid of some sector tariff or so where they'll just be punished. Pretty sad, honestly.
Yeah, I don't know if there'll be a lawsuit of that. There is already on the Fed governor stuff, but which was obvious that it was going to happen.
I think where this gets sticky is that line item in the press release that said that this 10% stake, which is a huge stake in a company, that it's going to be non-voting, but also that they're going to vote with what the board recommendations are, basically. Because then you can have a disproportionate percentage of the shares voting in one way, which could skew a little bit of the governance structure of some of these companies, right? Because it is the government, and you open the door for some ulterior motives or bad incentives there, because you are talking about subsidies, you're talking about grants, you're talking about all of these preferential treatments that you could potentially offer. And then if you have some governance structures inside the company itself for the government to be able to pull, then I think that is grounds for some shady stuff.
Yeah, shareholders could sue at that point, I think. So,
yeah. Thoughts on Nvidia earnings? We talked about this. We be some BNR insight gentlemen's. Nice. I don't know why I bookmarked that one. Yeah, I answered that. $200 or 170. Which one comes first on Nvidia?
Probably 200.
Okay. Can we get an updated Duolingo section or video? We got an updated section, Cole, so thank you. Let me unbookmark these. Hi, Roy. Quick question. Do you still have the Lulu swing position?
No. On swing positions, always set targets. So time, amount you're comfortable losing, and where to take gains. I did that. Didn't hit time. Did hit the amount that I was comfortable losing. And so I've just learned to be disciplined with swings. It's like, well, didn't work out, moving on. Now, that doesn't mean that Lulu won't rebound. I think it probably will. But yeah, it is what it is. Win some, lose one, some.
I'm actually at that point where Lulu is reporting earnings soon, and I kind of want to do some call options or sell some cash secured puts or something, because I think that this earnings is going to be freakishly good. I don't know. I might end up eating those words, but from what I'm seeing out there, just small indications, people independently doing research, doing store visits, whatnot. I think that the earnings has the potential to be really good. So I might be able to play it with some call options.
So one weird thing that happened while I was holding Lulu, and that also made it very easy to get out when I hit that max loss threshold, was they did a capital raise, which, I mean, they're profitable. They don't need to stay alive or anything like that. I was like, well, this could be for an acquisition or some sort of spin off or spin up of a product or whatever. The whole time they've been disciplined with buybacks. Now, if the thesis is buyback and that's the entire thesis, that's not a thesis. But they've been very disciplined. All of a sudden, the stock gets smashed down. They do a capital raise, and we don't see or know what that's for. It's weird. It's not as weird as what happened with Webull, but it was like I held anyway. And when I got to that max loss, I'm like, by Lulu. Now, maybe we hear about what that is. And then analysts, honestly, I don't remember the analyst questions from the previous Lulu earnings, but an analyst should hopefully ask that question, and we should get an answer, or at least enough of an answer of like, this is why we did it. Here's what we're seeing. Here's what we're going to do with this. Here's how to bring shareholder value. If you don't see that, I don't know, man. It's weird. It would be like if PayPal, like they've been smashing down their market cap, and if they suddenly dilute their stock and raise $10 billion, and you don't hear why,
Yeah,
I would have, like, that day, fine. A week goes by, 2 weeks go by, you reach out to investor relations, nothing. I'd be like, okay, I got to reduce. Like, there's something not right here.
Yeah. Brock says, I want to sponsor a members only deep dive for BMNR, $100 if you're up for it. Either myself or the both of us, Roy, to do a deep dive on BNMR. Yeah, maybe Brock.
It's cheaper if Tevis does it, just because $100 Canadian is like $10. So yeah, maybe go with that.
He didn't say Canadian. He said US.
Oh, okay.
I hope he didn't say Canadian. I wouldn't do it for $100 Canadian. You know how much time it takes to do a deep dive, man? It takes hours to do an actual like good one, you know.
Mm-hmm.
But maybe it's something that a lot of people are interested in. Then I'll definitely look into it. So yeah, Lululemon. I'm thinking about some call options. You heard it here first. TBD, what happens? Any chance of having Tim Sweeney on the channel soon? Get his insights on SoFi upcoming verticals. I can message Tim and see if he's willing to come on to the FinTech Friday show one of these weeks for sure.
He had a killer post the other day on SoFi and future growth potential. I think it was actually this morning or late last night. Check that out, but that'd be great. Yeah, Tim's brilliant.
Yeah. Okay. Have you considered C Limited, Sag Gas? I think the last time I took a look at this one, Roy, was 2021.
Yeah.
I did a full look between all their business lines, their gaming line and I think they have 3 major business lines. I haven't taken a look at them since, quite frankly. I don't love the fact that they're international, but what about you?
Likewise, like that was a hot name during COVID. And I looked briefly at it and I'm like, United States stocks is for me. I don't think it's a mistake to invest internationally, but right now the only international holding I have is Nubank. If I was going to do a second position, it'd be Mercado Libre. Yeah, I don't know. When I looked at it, it looked solid and good, but it's kind of like a little bit different company, but it's like Grab for me. I think that they'll be fine. I think Amit, especially with the time frame and just having shares and stuff, like he's going to be fine. I think he has maybe some calls too. But I just think that there's more compelling opportunities. And with finite resources, finite attention, I prefer to concentrate in core conviction. So I don't want exposure there. That region though, it is growing rapidly. So it could be a great opportunity. I haven't looked in 3 years.
Yeah. I saw this, Christine. Burry recently bought $11 million worth of Lulu, and I think he also bought call options.
And also Estee Lauder, I might be saying it wrong, EL. He bought
Lulu, he bought Estee Lauder, he bought a whole bunch of other stuff. He did, so we'll see what happens there. Again, I think Lulu can do well. I need to take a look at them.
ASML was another one that stood out to me that he bought. So,
yeah. Have you guys looked into Zoom Communications? Is this 2021 again? Because that's the last time I took a look at Zoom.
I'm curious, like Varun, if you're still there, like I've seen that name pop up a couple of times. I know that they're not dead or anything. Is there something new that they're doing, or is this more of a phenomenon like Open Door where you're looking at COVID darlings and like maybe some of them got overlooked? There's probably some diamonds in the rough there, but I've not looked at Zoom or thought about them seriously in years.
I just think it's kind of crazy that as we approach times of inflatedness and euphoria, that people start diversifying outside to find the next whatever. I think my camera's going to die in just a second. Because I think there's more than enough opportunities if you double down on your winners and concentrate further. And there is such a thing as diversification.
Yep.
Okay. I do think my camera is going to die soon. So if it does, I apologize.
Fair 2 minutes late.
Have you guys compared Nvidia to Broadcom in terms of valuations? Wow, that's a good question. I love both of those names. I think valuations, Kumar, is relative to also growth rate. So like from a PEG ratio perspective and also from a company prospects perspective, I think both of them are going to be winners. I think if you hit a dart and whichever one it lands on, you buy. 5 years from now, you're going to be a very happy individual, regardless of which one it falls on. So short answer is no, I have not. But there we go. But I'm bullish on either or. At current levels, HIMS or PayPal?
PayPal. You'll be waiting a little while. It depends on your horizon. Josh, I know you because of SoFi. You've been in SoFi a long time, and so yeah, I think PayPal. HIMS is going to be a lot more volatile. Honestly, I'd probably do both. I think both are opportunities here, but PayPal is criminally undervalued. It should be trading at $100. HIMS is really at fair value territory, but there's a lot of growth over the next 5 years. I do still think that PayPal will hit all-time highs by 2030. And so you can do the math on that. HIMS might do something similar, but I don't think it's nearly as likely. I mean, no, I said it wrong. Not as likely. Remove the word nearly.
Yeah.
Not bearish HIMS.
It depends on your time horizon, Josh. I'm happy to take the other side of that argument and say HIMS because it's such a coiled spring. But I think PayPal is more undervalued, and HIMS, there's a lot that's baked into the stock that is based on execution. So if they keep missing their guidance for Q3 or Q4, then they're going to get hurt disproportionately. So you got to take that with a grain of salt. But I think the upside is higher because I think PayPal is never going to get the respect it deserves by the market.
But I think you also, because he's not asking about returns necessarily, which will be what, you have to take the downside into consideration. Is there a potential downside on HIMS over 5 years? I mean, yeah, it's possible.
Yeah.
Is there on PayPal? It's pretty unlikely. Like some crazy thing would have to happen and shift, especially with what they're building, with what they're projecting, with what they're doing, and the stock that they're buying back is a massive floor as well. They're going to put up, between $7 and $8 billion. Is that correct? 6 or 7, $7 or $8 billion in free cash flow this year. You're going to see massive amounts in Q3 and Q4. That'll accelerate into next year, especially as advertising continues to build out. I'm not going to reiterate the whole thing, but basically, there's a lot less downside potential with PayPal versus HIMS. I think that HIMS and PayPal both do well, but take that into consideration. The margin of safety is absolutely there with PayPal, and it's not necessarily HIMS here. Now, if HIMS gets sold off because of a lawsuit and it goes down to $20 a share, my answer changes there.
Yeah. Let's take a look here. Broadcom is more expensive than Nvidia in valuation by all metrics, but it's also less concentrated business. It's more diversified. Yeah, Sagig is huge into Broadcom, and I think it's one of his larger positions. So I'm going to trust his word on that. Yeah, definitely congrats. I bought SoFi. I bought 100K of SoFi on margin at 623. Do you think I'm good? Yeah, dude, I think you're good, and I think you're bragging at this point.
Yeah. Congrats.
I'm not going to read that name, but congrats. Love your show, both. Tevis, any Canadian stocks that you've looked into other than Shopify? No. Well, actually, is Enphase? Enbridge.
No, Enphase is American.
Enbridge. Is it Enbridge? Yeah, that's one which I think is Canadian. Look, let me tell you that if Wealthsimple was a public company, I would buy that immediately, like on IPO day, because that is the Canadian Robinhood essentially. I think their latest valuation was definitely like well into the billions, for good reason. They're probably one of the biggest product innovators. Enbridge, Canadian oil and gas. But I don't really look at many Canadian stocks, even though I'm incentivized to from a tax perspective. I think they just are lower performing.
Yeah.
Nebius or PayPal faster to 100? Nebius. Absolutely Nebius. I don't know, Roy, if you disagree with that, but
I mean, I don't know Nebius as well. PayPal maybe after Q4 earnings, which would be in January. So if you think Nebius will hit $100 a share faster, it's also closer. A good chance. Like there's a lot of momentum and things going for Nebius. So maybe Nebius, but I mean, PayPal will get there. The Q3, Q4 are really important for PayPal. So, in like pretty easy, like honestly, to just absolutely destroy expectations. Plus, top line revenue grows, and Q4 is going to be a banger. So,
yeah, I mean, you have one that's growing 600%, and you won't have one that's growing 6%. So, I think like from a rocket ship potential, like I'm going to go with Nebius on that one. But I mean, Nebius can also get cut in half tomorrow. Like,
Yeah, I would say Nebius, but yeah, there's more risk there.
Yeah. What the heck?
No, like Brock says, there's a very different risk profile between the two. Yeah.
Yeah, exactly. They're completely different companies. Vroom says, sorry, pause the video. The bottom line has improved drastically in the past 3 years. Rule of 40 is at 46. With revenue contributing to just 4%.
That's funny. I actually had lunch with somebody where I was explaining Rule of 40. Wasn't supposed to be a stock lunch, but ended up being kind of a stock lunch. And I think he'd heard about it, but he didn't fully. So I broke that down and gave a hypothetical example. It's like, this doesn't happen often, but sometimes you have that margin growth rate, or you have that margin that just doing so well that even with low revenue growth, you're absolutely killing it. So, but no companies came to mind. Should have said Zoom, I guess. So my question is if that pricing power would actually be sticky or not, and can they actually accelerate revenue growth? So I don't know. It may be worth a look. Like a lot of times the market will do that, where it'll write off a company, write them off for dead. And if they're not dead and you know that, and you have a strong possibility that it's going to go on the upside, I mean, you have a Carvana moment then. I don't think Open Door is that. Maybe I'm wrong, but if you get some of those right, you don't need to get many right to have a good amount of money as a result. That's interesting. Huh?
Room says management guides 5.86 given this enterprise phone business growth. With that guide, the company is undervalued by at least 30%. That phone business growth is the tailwind.
Interesting. Thank you, Bryn.
Interesting indeed. Okay. I don't know if we have any other questions. We've been on for 2 hours and 10 minutes. And
next time will be a little bit earlier, guys. Win Civic probably, but I don't know. I would. This is one that for me, the right thing is just to be on the sidelines and cheer on retail. I would not want to short it. I think it's stupid to do, especially when there's momentum heading the other way. I wouldn't want to go long either. And most of it would be a trade, and I'm not going to trade it. I like for this type of trade, you either have to set stop losses or you have to have a lot of attention. And I don't do well with stop losses, and I don't have the time to just be glued to the price action. So,
yeah. Okay. Thank you, everybody, for being here and not being on Tanner's channel. We always appreciate it. That is the ethos of Bootleg Weekly. It is to be on our channel instead of that trader Tanner's. Yes, Roy, go ahead.
Somebody asked why we call it Bootleg Weekly. It's because of that. It really is.
It is. We had SoFi Weekly, and then we wanted to make a bootleg version where we just talk about whatever we want to talk about, and Tanner is not allowed on here. So thank you all for staying true. You're the real ones, and whoever is going to Tanner's channel right now, you know how I feel about you, and you can stay there. He can have you, okay?
Not for my channel. You guys are welcome either way.
Roy is indeed the GOAT. Like I said, we will have maybe slightly different schedules going forward. So
yeah, I saw that too. Very funny, Son of Sam.
Yeah, viewers dropped off like crazy because Tanner started at 7 and he's still on.
Yeah.
So this is why we don't like Tanner around here. Okay. Thanks, y'all. Go on Tanner's stream next and tell him how much you hate him. And we'll see you on I won't be on the show on Friday, but we'll see you next week on Bootleg Weekly. And that's it. Okay, bye.